Hello, should beginners swing traders stick to blue chip stocks? Excuse me, not necessarily. For the purpose of this video, I went online to search what blue chip stocks are, and I didn't even spell it right because again, it's not a term that I use when I'm swing trading. I just know that blue chip stocks might be those kind of strong stocks. So, and based on Google AI definition, yes, they are large cap stocks. And then I went on to read more about it, and it listed some example of what will be included among blue chip stocks. And I will say that as a beginner swing trader, it's not because a stock is a blue chip stock that automatically it should be on your watch list. Depending on the swing trading strategy you are using, a blue chip stocks may not be comparable with your strategy for you to swing trade it. Another strategy might work better for it. But again, I'm not trying to see what strategy can work with which stocks. I pick a strategy that I think it makes sense to me, and I'm trying to customize it to my liking, to me, my personality type, and my risk tolerance. In the meantime, I'm testing it against stocks to see stocks that are comparable with that strategy, so that I have a list of those stocks and swing trade them with that strategy. So there is not one way of swing trading, and you cannot use one strategy. I don't think you can use one strategy to swing trade all the stocks out there, or one strategy that you have can swing trade any type of stocks you'll come across. Depending on how the stocks is moving, a different strategy might be better for it. But since I'm not trying to swing through all the stocks that is on the stock market, but I'm trying to see stocks out there that are well suited with the strategy that makes sense, that I'm more comfortable using with my money to swing trade, I'm in search of those stocks. And when I'm looking at this list, for instance, yes, Apple is on my list this year, but was not on it the past 2 years. Why? I'm not entirely sure. I bought it before successfully. Microsoft is on my list. Nvidia is on it. Coke, I'm not entirely sure. We can go to our watch list here and put Coke on it. So I do have this. Let's go to maximum monthly chart. So I could have added to it. Let's go and just search my list to see if it's on it. No, it's not here. No. Let's go to this one. Okay, so I added to it this year. The past 2 years, it was not included. So and I chose the line I will be buying it on. When we come back here, Procter & Gamble is on my list last year, and this year Walmart is on my list for the past 2 years, 3 years. From 2024, when I start swing trading, to 2026, Walmart is on it. Johnson & Johnson was not on my list for the past 2 years, but I think I included this year, again, creating a wider list that I can, just analyze during the weekend. I included in it, and I traded or invested in Johnson & Johnson successfully, and I think I have it in one of my brokerage account as well. But for the past 2 years, I don't think it was on my watch list of stocks. It was not on this one, and I don't think it was on this one either. So therefore, it's not because it's not because a stock is a stable company that automatically you can swing trade it. Because when you are swing trading, you want it to capitalize on the growth. And some company can be very slow growing. And the past 2 years, especially last year, I didn't really want to swing through those type of stuff that are slow growing. You'll find both among the large cap companies. So I have some large cap companies on my master list, but choosing stocks for 2026, I eliminated a few of them. So we can go back and we are going to see Pfizer. I traded Pfizer in the past, but I don't know if I put it. I think I added this year, but it was not on my list the past 2 years. And that is a company that I personally like, and I traded in the past more than once, but I just don't. And I bought it in the past for dividend income purposes because it does pay dividend. But when it comes to swing trading, I just didn't, swing trade it. So, but when I was creating my list for 2026 and I started toward the end of December, I found it around the low side and I bought it. Like it touched base with that valley line and started going up when I came across it and I bought some. So that means it's on my watch list for 2026, and I don't know if I put it in the I put it in the investment um, list rather than I like to have the one that are growing steadily of at a good pace that I like. I want to have a list of those that I know that I can buy and sell within a year or two, buying it at the value and selling it at the peak. And the one that takes years to reach the peak and take years to come back down, I like to consider them like they can be invested in. I'm going to swing through them, but I know that I'm going to keep them in my portfolio for years. So Pfizer is one of those. So when it comes to swing trading, those are stocks that they might be large cap stocks. They are so stable that they take their times to grow. They take their times to pull back. And when you are swing trading, technically, those are not stocks you really want to be swing trading because you want to go in and out within a reasonable time frame, and lock in your profits. So those blue chip stocks are stocks to invest in. Not all of them necessarily, but you get the point. For instance, when we are looking at Pfizer, you can see how many years it went up the way to the top, how many years it took. We have the date on the x-axis from the past to the present, and we have the price on the y-axis. So those dotted lines you are seeing are years. So you can see how many years it took for that to come back down. And when it start going up again and surpass this around somewhere here, you can see how many years it took for that to surpass this peak here. And then it surpassed it, and then took about 4 years or so to come back down. So therefore, I bought it in the past, and I think we still have it in our portfolio because again, it was going down. I bought it there, but guess what? It was not done going down. So now that instead of buying it for income, dividend income purposes, I wanted to swing trade or investing in it using swing trading strategy that I'm using. I decided that this is the valley line I'm going to be buying it at, and it reached sometimes in April, and I noticed it in September when I was going through my master list, seeing, checking stocks, analyzing stocks there that I can create this list with. I came across it and I bought some. So even though I have some in the portfolio that are negative, I added to it. So in my opinion, and JPM, I think for the past 3 years, I have it in my portfolio. If not, I know for sure that last year I had it in my portfolio and I still have it this year. So, but I don't think I traded it yet. I just have not found it at the valley to buy it yet. But yeah, so there is growth there, and you can see the valley line is growing up as well. Those higher lows are tilted upward. So yes, I have to say that those companies are, you can see Nvidia, I traded more than once. Those arrows facing up show where I bought, and arrows facing down shows where I sold. So I bought it more than once. And we can go through Microsoft. And I bought it more than once as well. And right now it seems to be going down. And but yeah, so it's not because a stock is a more the blue sheet that automatically you should be swing trading it. It needs to be comparable with the strategy you are using before you can swing trade it. But as a beginner, it's good to find a more large cap stocks that are comparable with the strategy you are using, so that you can create a watch list of those and start swing trading them. And then from there, once you polish that strategy and you use those large cap as a benchmark that other market cap should be measured against, you can go now analyze small cap stocks, mid cap stocks, to see good ones that are there that you can swing trade with the strategy you are using. That is the process I'm going through. It's not because a stock is a large cap stock or is a blue chip stock that automatically it will make it to my watch list. There are other filters that I put those stocks through. If they don't meet it, they don't get to be on my final watch list of stocks that I will swing trade during the year. And those are the filters that I put those stocks through. And some large cap stocks will end up failing the last filter, and then they will be out of it. So because those large cap stocks that are stable, some of them can be downward growing or might be level, especially the one that pay a lot of dividend tend to grow very slowly. And when you are swing trading, you want to capitalize on those growth away from the valley line, because I like to view swing trading and investing like when you are investing in the stocks for years, you are growing your stocks along the valley line. And when you are investing in growth stocks, the valley line is upward tilted in some way, so therefore your money is going to continue growing when that stocks is growing, but it's going to be growing along the valley line. So swing trading those stocks you are investing in, the way I view it is locking in those growth above the valley line. So That means buying the stocks at the valley line, selling it at the peak, wait to buy it again at the valley line, sell it at the peak. So you'll be buying it at a higher price, but at the same time, you'll be locking in this growth away from the valley line. So at least choosing to swing trade growth stocks, that's the way it is. Since the valley line is upward tilted, you'll be paying higher price. Next time you are going to find it around the valley line. And I think you can make more money like that, generating cash flow from your investment, not just through dividend income payments that stocks can pay you, but by locking in those swing away from the valley line that the stocks is doing, by buying and selling and rebuying it again at the valley. So that's the way I'm trying to combine cash flow and investment in one strategy, and I'm still working on that swing trading strategy to polish it. So this 2026 swing trading watch list is a little bit wider or longer. I'm more flexible and end up creating a secondary list of those stocks that are slow growers that I don't want to discredit out of the bat, but consider them and the good ones so that I can use my swing trading strategy for it, and the one that are quick growing, I can use my investment strategy to them as well with the swing trading strategy. By just keep buying those stocks over and over, that is my way of investing in them. I keep buying them, but at the same time I keep selling them as well so that I can cash flow this growth, lock it in instead of losing it. When we are taking Microsoft for instance, yes, I bought it high here, it pulled back and went back up, and I sold it in 2025. It continued a little bit up, came back, went up, and now it's here. So now I wonder if I wanted to buy it here, wait here, and here. But I think I will buy some share here. If you move down here, I might buy some share. If you move down to this line, I might buy some share. And then I will learn from it that this is now the valley line. Unless I can tell for sure that this is now the valley line, instead of missing out, I can just decide that it is okay if I buy at those three lines, not knowing which one is going to be using. It used this one maybe 4-5 years ago, 1, 2, 3, 4 years ago, and there is a chance it might come back down here. But in the meantime, I don't want to wait on it. I might buy some. So that is the strategy I'm using, and I'm okay if it comes down here. I'll be negative on this one, but I will wait. You see, I bought it there and I waited the whole time. It came back down and went back up because I pretty much, yeah, I was trading it in a certain way here using short upturn and swing trading strategy. It was done and I got stuck in it, but then I just let it be negative in the account. It's Microsoft stocks. It's not going anywhere. That's why swing trading large cap stocks as a beginner is good for you. You are not going to lose your money. So I just let it be for over a year, and I sold it at a positive, at a profit. You can see the corresponding price there and the corresponding price here. So, and I learned from that experience. And in 2025, I wanted to use up to swing trading strategy. I have those, and I didn't buy it until now. I'm seeing it again at the valley. I might buy some just in case it decided to just go up from here like the previous time. If it decided that it was done with this cycle, it wanted to come down here like this, then I know that this is now the valley line. I will learn from it, but I will buy some more. If it decided that, you know what, no, this is where it wanted to go, this is the valley, I just know that after purchasing those 3 times, that the valley line is going to be this, and that is where I will be waiting for it next time after I sold it, you know, past the peak, all-time highest price. That is the strategy that I'm using. Today we are going to analyze AMP, and today is February 7, 2026. AMP is highlighted on our on the watch list because we bought it, and chances that we have not sold it yet. So is it a time to buy AMP? In my opinion, the answer is no. And why is that? Well, we want to buy at this valley line, and right now it surpasses going up. So therefore, because it's far from the valley line, it's not the time to buy. However, knowing that it's already touched the valley line, therefore it could well be on its way up and has now reached it yet. If you come across it like this and you wanted to buy these stocks but you just missed the window around the valley line and you are using this long uptrend swing trading strategy, it, it, if it was me, yes, I could purchase it, knowing that it is on its way to the top of the mountain but has now reached it yet. Yes, I will purchase it, but at the same time, I will know that, on its way up, is going to be pulling back, resting a little bit, continue going up. Therefore, depending on where I purchase it, I will be finding a negative in my portfolio, times to times finding a positive in my portfolio. But again, it has now reached the peak yet. So therefore, it is getting there. It left the valley. So where it came from is the valley on its way to the top. So when we are looking, so therefore, with that in mind, yes, you could buy it with that assumption. You will be paying a higher price for it, but at the same time, I could decide not to buy it because it just left there. So those are things that you just have to decide it for yourself, and just wait to buy it next time. So when we are looking at it though, we will notice that after this all-time highest price, it came back down to the valley and start going up from there, but didn't reach it. It came back down again and start going up from there. So because the valley line is still upward, this valley line price is lower than this one. So even though it came back down, this growth here was lost, it still came back down here at a higher price. So if you purchase it here, you didn't sell it because you are waiting to sell it at a higher price and it came back down here, you will still be positive in it. You just didn't lock in this growth here. And that is one thing to notice here. The second thing is with those large cap stocks, as a beginner, if you didn't come across these stocks on time, and when you come across it was around this time, you can still buy it. You could still have purchased it when some people will have purchased it here. So around this valley line, with my swing trading strategy, I'm okay paying price along this valley line. And now buying it here, I can still buy it here. And that's what happened. I didn't purchase it here, even though I was watching it. I didn't purchase it here. After I sold it there, I purchased it somewhere there. It pulled back a little bit, went back up, and I just sold it because, again, 2024, I used a different strategy, short version of the strategy I'm using now. In 2025, I decided that I'm going to use a longer version. So therefore, I sold it, not knowing if, this trend line is ended or not, how long it's going to continue going up. So I sold it, it went up a little bit, and then it pulled back. So after it pulled back, I was not entirely sure if it's going to go a little bit lower than that. So I kept observing it and I didn't buy it. So, and then next time that I found it was toward the end of the year in November, and this happened in April. So you can see in April, in November, we saw it around that valley line. So November, when I saw it, I bought some. So buying it around this valley line, it start going up again. So therefore, you notice that I'll be positive in this because the corresponding price here is lower than the price at this level currently. And the last time the markets opened, it closed on green. That means the price at the end of the day was higher than the price in the morning when the markets open. So I'm positive in these stocks. How positive? I'm not entirely sure because again, those are daily bar, daily bar. I bought it around here. So what price I pay for it, this chart is not going to tell me. It's just going to tell me the date I bought it, the day I bought it. So, and if we chose the highest price somewhere here is around 450, and right now is 542. So I could well have over $100 profit per share in this, and I don't know how many shares I purchased. So that's just to put it in perspective. The strategy I'm using, that long option and swing trading strategy, buy at the valley and sell it at the peak, it's not at the peak yet. And the peak in my mind, when I say the peak, I'm talking about all-time highest price because I'm using maximum daily chart. It will show me all-time historical all-time highest price for that stocks. I use that as a reference for my exits, and I use the valley for my entry. So it has now reached this all-time, it has not surpassed the previous all-time highest price yet, and already I could well have accumulated $100 profit per share on this one stock. But I know there is more I can accumulate because again there is all-time highest price there that is going to reach, and when it reaches, I'm not going to sell it right away. Then I'll come and analyze it and see the last time it left this valley line, how long it took before it decided to come back down. It took over a year, close to a year and a half. So therefore, buying a here in, I won't be considering this, but I'll be considering this. That's when the cycle started. So I will be expecting that it could continue this journey for about a year and a half as well. So even though I purchased it here, it touched base with it here. So I need to consider that. That is the way I'm trying to think about my exit plan. So here is April. So I will anticipate that it's going to exceed all-time highest price around April or before then. If it exceeded before April, then I can decide thinking if I want to sell it or not. And if it didn't exceed it before April, I'm not going to do anything. I'm just going to keep observing it. But again, I tend to rely on the past to make my decision to buy and sell, to see if there is a repeatable pattern here that I can rely on. And those are the type of stocks I'm looking for to make up my watch list. Those stocks that have repeatable pattern that I can use to make my buying and selling decision, because I'm only relying on this technical analysis, the chart analysis, without reading about the company, paying attention to the news to trade, or reading the company's financials, but just analyzing the wave the chart stocks is providing. And therefore I like to have those stocks that have historical that went public for years, that I can have historical chart to work with. That's why I use maximum chart with the daily to buy and sell, monthly to have a big picture. Again, maximum monthly chart to have a picture of the pattern of the stocks chart. So AMP, I won't be buying it now because I'll be paying a higher price for it, but at the same time, I could buy it knowing that it is on its path to the peak. It is there, and there is a chance it could pull back a little bit, but temporarily I could be negative if I purchase it now, but for sure it is on way to the top. It's now on its way down. It reached the valley line twice. It's done with all the previous all-time highest price. It came back down to the valley. It's working on its way to the top. So therefore, it's going to get there at some point. For that reason, I could decide to pay a high price for it and buy it, or I can decide to just wait on it, especially once it reaches all-time highest price. If it does not take long to come back down, just months to come back down, then I can decide not to take an action, but just to let it be and wait to buy it at the valley line next time. Some stocks can take 1 year, 2 years to come back down. Those, when you catch them like that, you might decide that, well, it's okay to buy it, to continue the journey up, and then from there sell it and wait to buy it at the valley line. Those are now like a clear rule to apply for all of your stocks. You can make exceptions depending on the situation you are facing. But we just have a deep dive into AMP. Since we have it in our portfolio, buying it is now our goal now, but selling it is. So therefore, when I'm analyzing it, I will see where I bought it, where the price is right now, and where it is going, or where I wanted to sell it. I will have that in mind, and you know, taking those 3 points in mind when I'm looking at the stocks that I repurchase in my portfolio. Unless I purchase it is going downward to another valley line, then I might decide to buy more, then I might be thinking about buying. But when it's going well like this, thinking about selling is what I will have in mind, and analyzing those 3 points, where I bought it or the valley line, where the price is, where the highest peak, the previous high peak is. So thank you so much for watching our videos. We thank you very much for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi, Liberman, Curious of Liberman Consulting, L.L.C. YouTube channel, and ninasub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. To illustrate my point of can buy it there after I miss, if I have missed this window, I can buy it there is a second option, a valid option. I use that strategy with a stocks, I believe it's TD, and don't know if you'll be able to see it. But again, I was doing my analysis to gather stocks for 2026, and I came across TD on my master list in November, and I bought it there. So let's go back for you to see it. So when I saw it, I know that it left the valley line on its way up. So I bought it there in November, just like the way I'm showing you about AMP, knowing that after it reached all-time highest price, I will sell it. So it reached all-time highest price, I didn't sell it. I waited on it a little bit longer, and I sold it. Some here is showing January 27. It pulled back a little bit and went up. it can reach even higher price. So we are going to go to maximum monthly chart for you to see it. So when I was doing the analysis and I know that it's respecting this valley line, and it came back down to it, and it took 1, 2, 3 years to come back down here, and then it start going up. So in my opinion, it's going to take about 3 years if it's going to repeat this pattern to come back down. 2 to 3 years to come back down. So that means 2029, 2028, I'm not entirely sure. So therefore, since I know that it is respecting this valley line and it is on its way up, but has not reached it yet, I bought it there. It went up a little bit, but I don't know for how long it's going to continue doing that. As I'm looking at the past here, this growth is 2 years. From there to this end is 2 years. But then from this level, it's like 6 months, but not much of a growth here. There is a good dip here, and then it went back to that level and exceeded. So I didn't really think there is much of growth here for me to keep my money there for 6 months. Does that make sense? So therefore, as it exceeded this level, it went up a little bit, I decided to just sell it instead of continue holding on to it. But again, it can continue growing for 2 years, and we have 1 year already that it did already. So therefore, I just decided to sell it, not knowing if it's going to how much more growth I'm going to be seeing there. But I know that there is a chance it's going to pull back. There is a chance it's going to pull back and then go back up. So there will be a good growth there, 73.85. So more than $10 growth there, but it's going to come down here to 63. 73 to 63, that's $10 a drop, and then from here to there is like $12 growth there. So, and it's going to do that within 6 months. So I just didn't think like there is much more there that I can accumulate, and I don't really, again, it's not that it's going to exactly respect those time frame. So therefore, I just decided to just lock in that small profit and be okay with it. And I don't know how much profit I made, maybe $9. I'm not entirely sure, but and I sold it. So I don't even know how many stocks I purchased, but this is just an example, to share it with you. When I will take that risk, it is a risk. Decided not to wait to buy it here but buying it there, it is a risk, and it's one way I can push myself out of my comfort zone, because I'm not really a risk taker, but at the same time I'm a risk taker. I just take my time to analyze the risk to see if it's worth taking. And yes, time to time I try to push myself out of my comfort zone to take those type of risk and learn from it. So that is based on this experience that I'm saying that it can be applied to AMP situation. Although AMP does not take 3 years to come back down to the valley. So therefore, it may not be necessary to jump in when it's that far gone, but just to wait for it to come back down. So it's just that sometimes you might be okay taking that leap, and sometimes you will say, no, you are not going to. Just it is okay. And when you are not comfortable with those, just don't take any action. Just keep observing it and take note of what you learn from it. Thank you for your time. For more videos in this series, will you please check our playlist in the description of this video, how to start swing trading step by step using long Uptrend line. And we do have other swing trading related playlists as well. Thank you. Happy swing trading.